Hello, this is Brian Shannon from Alpha Trends Blogspot. It's March 30th, 2007, and the market's closed. We had another very volatile session again today, and unfortunately, it really didn't do anything to help resolve the lack of clarity that I've been having with this market lately. You know, it's good to see that once again the market did hold above this prior resistance level, so that's, it can be viewed as a positive. I don't know what's with that trend line there, but it did, you know, shake out below that level once again and then close positively. If you remember yesterday, what I said I was looking for was probably a little bit of resistance near about 43.70, and we were looking at this declining 5-day moving average as a reason for not really getting too excited about this strength we saw late in the day yesterday. In fact, I said I'd be looking for a pullback to 43.30, which would make a higher low, and then hopefully we could see it push past 43.70. So I still think that that 43.7, let's call it 43.75 or so, is going to be important for next week. 43.75, 43.80 in that area. So hopefully getting above that level. Maybe we could run up there again, make another little higher low, and then it could potentially push higher from there. That's just a scenario, but it is starting to look a little bit more bullish. You could look at this downtrend line in here too, and kind of come up with an inverted head and shoulders. One of the readers, Tom, who puts a lot of comments in, noticed that as well and emailed me with that this afternoon. If that's the case, then you could look at this low here at about 43.10, go straight up to the top of the neckline, which is 43.80. Add that to the breakout point. Let's say it breaks out at 43.70. So you take that 70 cents and come up with a target of 44.40, which would put us right back at last week's highs. Just one potential scenario, but something to be aware of. Again, we've got the declining 5-day moving average, but we do have higher low in here. So now this area is going to be the important level for the Nasdaq 100. And you know, on the weekly time frame, we saw just consolidation after that big move last week. It is kind of unfortunate that we basically gave up the whole gain from the Fed. So you could look at that Federal Reserve meeting, and you know, a lot of times what those Federal Reserve meetings do is get people all excited about something real, you know, for the short term, but then they turn into a non-event, and the trend will reemerge or reveal itself. And so far, there's no trend being revealed in here. All we have is indecision with these moving averages crisscrossing, and the declining 50-day moving average gives me reason for concern. We're gonna, you know, to get bullish again, pushing past that level, 44.50, and short term though, above 43.80. Maybe we could see a test of that level. The S&P 500 closed with a gain of 7 cents today, after coming down, and they gave up that full. Almost gave up that full, not on a closing basis, but they almost gave up that full Federal Reserve move as well. But today we saw a real shakeout here, and look at where it failed today, at the declining 5-day moving average. That's why I point that out a lot. Look at how the advancing 5-day moving average acted as support, and then the declining 5-day moving average acted as resistance. I don't think that's a coincidence. I think there's a lot of institutions that probably make some moves off of that moving average. That is, they adjust their positions off that moving average rather than say moves off the move. But anyways, the point is we had a nice little shakeout. It broke down below that level that we've been watching, and a lot of other people have been watching, I'm sure, as well, too, at 140, 135. But this little shakeout actually makes the market a little bit stronger. It's not going to be really bullish, I don't think, though, until probably 142.50 on these S&Ps. So we're kind of stuck in the middle of no man's land here on the shorter term move. Look at all these moving averages crossing back and forth, representing indecision. The daily time frame, you can make a case that this is bullish because we've got this prior level of resistance acting as support in here, but it's just so choppy in this area that's hard to really have any conviction on my part, definitely. So we're not going to look at the MDY. We're going to replace that with the IWM. The IWM is the Russell 2000 iShares Trust. So this is a much more liquid vehicle, as someone in the comments pointed out, and they basically trade the same way. So we're going to start substituting the MDY with the IWM, which is the Russell 2000. And again, it's a very liquid, so you can't trade this thing. In here we've got what looks to me a pretty obvious level, this old resistance at about 79.5. Looks like it's acting as resistance in here again. Wasn't able to close above that level. But again, I'll point out that we do have a rising 50-day moving average, and we've got a rising 10 and 20-day moving average as well. So this market, the mid caps, the Russell, whatever you want to call them, does look to be more bullish. However, we've got that 5-day moving average still declining, and looks like a little resistance, probably up near 142.60. That's going to have to it's going to have to push above that level before we can get kind of any confidence in this market. So IWM, let me just readjust that. So here's the 10-minute time frame. You can see it did make it above there, but again, a lot of times what I like to point out is the direction of the moving average is more important than where the stock is in relation to it. In particular, on a daily chart, you notice that a lot of times with a 50-day moving average. The semiconductors were down 9 cents today, and they continue to trade within this range that they've been in, that we've been pointing out for the last 6 to 9 months here. I don't know how long I've been pointing out, but the range has been about 9 months. It closed just below that 200-day moving average. I don't think that's a big deal, but it's still stuck in this range, so nothing to get excited about if you're bullish or bearish, in my opinion. CMED was a stock we had gotten short yesterday at 27.75. Yesterday I suggested that you lower your stop to break even, so you should have been out of this stock at break even today, and good thing because it continued higher, and that saved a 45-cent loss if you continue to hold it. aQuantive, AQNT, this was a nice one today because we were looking for a pullback to, I forgot the level, but we were looking for a pullback to 27.45 and then to buy it above 24.50. So you should have purchased this one at, and here's the 27.45 level, and then purchase at 24.50. So that was a nice purchase, and I think you can raise the stop now to, let's just say, $27.70 in AQNT. I'm just writing that down. FLIR, F-L-I-R, was another good purchase. This stock we were looking for, here's a 10-minute chart, so what we were looking for in the 2-minute chart, let's just take a little bit more clarity in here, was first a pullback to 35.20, and you see that that occurred early on as it actually went below there. So we're not buying the pullback, but instead we're buying strength after the pullback. The idea was to buy it above 35.30 right here, and now I think you can comfortably raise your stop. Let's put it to $35.35. Hopefully this stock can continue to move higher, and we can ratchet that up a lot more next week. MGAM was the other stock that we had looked at as a potential long candidate today to buy that above $11.90. That move occurred early on today, so you should have purchased the stock at about, let's just call it $11.91. And now I think that our stop had been $11.70. Let's raise it up to here. Let's just go a couple pennies below the low. We'll put our stop now at $11.77 in MGAM. Everybody have a great weekend. I will be back with another video for stock trading ideas for Monday at some point in the weekend.